This is news from yesterday, so super hot off the press. Fed announced yesterday they're going to take their third consecutive jumbo hike. This is the highest federal funds rate that we've had since 2008. When people see this, I think there's panic. I'm hoping you can explain the economics to me. When everything is getting more expensive, then these guys come in over the top and raise the borrowing rate. How does that help us?
I mean, one of the simplest ways is that mortgage rates go up and automotive loan rates go up. And I think housing and automotive is some, really significant part of the economy, like a third or something like that. So housing, is slowing down. Housing prices are coming down because the cost of carrying a mortgage is going up, right? So at a simple level, when you increase the cost of borrowing, there's less liquidity in the economy in general, right? Because, money is not free anymore. Money was literally free.
Yeah.
And it's not free anymore. So there's a cost to taking that liquidity on. And so you see it in housing right now, one of the biggest impacts of it. So when you can get 3.5% overnight lending rates, you're not going to get a 3.5% mortgage, right? Because those with capital can earn 3.5% overnight, for an overnight rate, as opposed to on a 15, 30-year mortgage. So anyway, that's just a simple level at which it slows things down. The trouble is that we're living in non-linear times. So normally you think if you, if you're on a kind of linear trajectory in a straight line and you give it a little nudge, you can just, change the trajectory of the line a little bit,
right?
Make it a little more up or a little more down. But in non-linearity, you don't have that control. So shout out to Ben Hunt at Epsilon Theory. He's been the one who's been on this. One of the aspects of inflation that the Federal Reserve really isn't in control. Their hikes aren't, they are having an impact. They will have an impact, but it's going to take a lot longer for them to have an impact than people realize. And he said the same thing when rates were going to zero and negative. They're not going to solve the problem this way. There's too much nonlinearity in the system right now, and so that's going on as inflation is taking off. They just don't have the control that they think they do. And, they've even admitted it now. So they're like, we don't know what's going to happen. We're flying blind. We got to go by the data. When it comes out, we're not giving forward guidance anymore. And so, at least they're admitting it. But we really don't know. We really don't know what's going to happen. We don't know what happens, when you push over here, if it's going to pop out somewhere else. That's the situation that we're in. That's why there's more volatility, more uncertainty, and nobody really knows. What we do know pretty sure, though, is that there's going to be a recession. If we're probably already in a recession.
Yeah.